Forming an LLC will not lower your taxes. I know that's the opposite of what half the internet told you, but it's the truth, and believing the myth costs people real money in fees for zero savings. So let's clear it up. What an LLC actually does, what it doesn't, and when it genuinely saves you money. Let's break it down. Here's the core misunderstanding. An LLC is a legal structure, not a tax structure. It's created under state law to do one main thing: separate your personal stuff from your business. The IRS doesn't even have a tax return for an LLC. That fact alone tells you it's not a tax strategy by itself. So how does an LLC get taxed? By default, the IRS ignores it and taxes you exactly as before. A one-owner LLC is taxed as a sole proprietor. Everything flows onto Schedule C, the same form you'd use with no LLC at all. A multi-owner LLC is taxed as a partnership. Either way, the LLC changes nothing about the tax itself. And here it is on the actual form. Your single-member LLC's income doesn't get its own return. It lands right back here, on Schedule C, under your name. Same income, same expenses, same net profit, same taxes. The LLC wrapper around your business is invisible to this page. Now the big one, self-employment tax. This is the 15.3% for Social Security and Medicare that hits your business profit. Forming an LLC does absolutely nothing to reduce it. If you owed self-employment tax as a freelancer, you owe the exact same self-employment tax the day after you form the LLC, not $1 less. Here's the myth that costs people the most. I need an LLC to write off my expenses. False. You can deduct every legitimate business expense as a plain sole proprietor with no LLC at all: mileage, home office, supplies, software. Deductions come from running a business, not from having an LLC. The LLC unlocks nothing on the deduction side. So what does an LLC actually give you? Real things, just not tax cuts. Number 1, liability protection. It separates your personal assets like your house and savings from business debts and lawsuits. That's the main reason to form one. It also adds credibility with clients and banks, and it makes it cleaner to bring on partners. And LLCs are not free. Depending on your state, you'll pay a formation fee, and often an annual report fee or franchise tax just to keep it alive. Some states charge hundreds of dollars a year. California, for example, has an $800 minimum annual tax. So if you formed one purely for tax savings, you may be paying money to save nothing. So where does the tax savings idea even come from? It comes from something real but different: an S-corp election. An LLC can choose to be taxed as an S-corporation by filing a form with the IRS. That election, not the LLC itself, is what can lower self-employment tax. The LLC is just the vehicle that makes the election possible. But that election only makes sense above a certain income, and it comes with strings. You have to run payroll, pay yourself a reasonable salary, file a separate business return, and take on more paperwork and cost. For a lot of small businesses, those costs eat the savings. We've got a whole video on exactly when the S-corp math works. But the key point here is that it's the election doing the work, not the LLC. Let's make it concrete. A freelancer earning $50,000 in profit forms an LLC because a video promised tax savings. The result on their return: their income tax is identical. Their self-employment tax is identical. Their deductions are identical. The LLC saved them precisely $0 in tax. What they actually got for their money was liability protection, which may be well worth it. If a client sues or the business takes on debt, their personal house and savings are better shielded. That's a real, valuable benefit. It's just not a tax benefit, and pretending it is leads to disappointment at tax time. Now flip it. That same freelancer, once their profit climbs, say past $70,000 or $80,000, might elect S-corp status on that LLC and start saving real money on self-employment tax, even after payroll costs. Same LLC, but now it's the election creating the savings. Timing and income level are everything. So how do you decide if you even need an LLC? Ask what you actually want. If you want to protect personal assets or look more professional, an LLC makes sense. If you only want to lower taxes right now, an LLC by itself won't do it, and you should look at deductions, retirement contributions, and eventually an S-corp election instead. And whatever you do, once you have an LLC, respect it. Keep a separate business bank account. Don't mix personal and business money, and keep clean records. If you blur those lines, a court can ignore your LLC and come after your personal assets anyway, which erases the one real benefit you formed it for. Quick recap. An LLC is a legal shield, not a tax strategy. By default, your taxes don't change, same Schedule C, same self-employment tax, same deductions. It costs money to keep. The real tax savings come later from an S-corp election, not the LLC itself. Form one for protection, and don't expect a smaller tax bill just for having it. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so every figure here is checked against the IRS sources. It's always educational, never advice for your specific situation. Bottom line, form an LLC for the right reason, protecting what you own, and you'll be glad you did. Form it expecting a lower tax bill, and you'll just be out the fees. Know the difference, and you'll make the smart call for your business. This is general education, not tax advice, so check with a pro about your situation. Subscribe to the Tax Breakdown for simple tax-saving tips before you file.